All right, welcome everybody to our webinar this afternoon for us. This is Markus Heitkoetter from Rockwell Trading, and I'm here with Rob Booker, famous author, currency trader, speaker, Prime Minister of the Pips, and we are here,
Magician.
a magician, artist, so the list goes on, and we are here to talk about trading this afternoon to you. And Rob and I have known each other now for several years. Actually, we met in Barcelona, Spain, where we were both speakers at the International Traders Conference. And I mean, you hear us both saying all the time that there are so many ways to approach the markets, to trade the markets. There's not only one way to trade the markets, there are probably thousands of ways, and several hundred of them might be profitable. Anyhow, you know what we're talking about. So we decided to do this webinar together this afternoon to show you a little bit what we are doing, what we are looking at when we are looking at charts. And you will see, although sometimes it is very different what we are looking at, when it comes to our mindset, you will find that there are many similarities, that we think alike, and this is why we thought that we would benefit from this. Now, Rob, I know that you are mainly trading the currencies. You're a great forex trader. I personally trade the futures markets, but as you will see, it doesn't really matter what you trade. You can use the approaches that we are both using in a variety of markets. So I don't know, that's as much of the introduction that I just thought of, because I haven't written anything down. Rob, do you have anything
Sounds
to
pretty
add at
good.
this point?
Well, one thing I really liked about Marcus when we first met in the ladies' room was we didn't really actually meet there, but one thing I've always appreciated about Marcus is, like me, Marcus feels that if you're good at trading and you're good at teaching and you enjoy other traders, that you have a responsibility or an opportunity, in other words, to share what you know with other traders. And over the years, we've always considered what a great idea it would be to do a webinar together, tell some stories, look at some examples of trades, share some tips or tricks or strategies or things that have made a difference for us, and sort of leave you better than we found you and learn from you. And we've just never done it. And Marcus, finally, a couple of weeks ago, we saw each other in Las Vegas, and we decided that it was finally time, that we needed to get down to business, do a webinar together, invite people from that you know, invite people that I know, all get together, have a meeting, and share some stories and some ideas and some strategies. And I think that's what we're going to do today. I think, Marcus, we're planning on meeting for the next 56 minutes or so, sharing some material together, and then leaving about 10 minutes at the end for questions. Now, if there's a brilliant question, we might interrupt each other over the course of the webinar, but we'll keep an eye on those questions as we go, and maybe Marcus save some time at the end for the questions that everyone seems to be asking.
Yep, that sounds great. So why did you get started, Rob, and tell a bit about your experience as a trader and what you're doing.
Well, as everyone here is probably aware, there's this statistic that 99% of businesses fail. And you can Google that online like I'm doing on the screen right in front of us, and there's all kinds of things that pop up, and one killer reason why online businesses fail. That sounds very, 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 what's behind this high small biz failure rates? And you hear that there are failure rates in business, there are failure rates in trading, and it's really true. My first business was created together with a friend of mine from college in 1998. I'd finished law school, moved to the East Coast, thought I was going to start a PhD program, but instead went into business for myself. And we made about $1.2 million in that business in the first 14 months, Marcus. And that's pretty good, wasn't it? I mean, that's a lot of money.
Yeah.
That's pretty awesome. And unfortunately, Marcus, we spent about 1.4 over the course of that time. And we spent that amount of money for a lot of different reasons, including stupidity. We didn't keep good records. we made mistakes about just all kinds of different things. So we failed, and my business partner decided that it would be a really good time to move to South America. So he left, he went to South America, and I began looking at other things that I could do to pay off some of those business debts. And I'll show you a link later on where you can read more about that story and see how it ended up and whatever. And Marcus, that was the beginning of my trading career. Of all the things that you could possibly do in the world to make money quickly, trading is probably the worst one. It's probably the worst idea ever to trade under financial pressure. But the reality is that most of us, that's the way most of us get started. And so I started trading. And over the course of our time today, together with Marcus and in other things that you can find online that I've done before, I made it as a trader. I succeeded as a trader. I'm not the world's best trader. I'm sure there are people here who are better than I am. I have all kinds of personal faults, and I made tons of mistakes in my life, but I made it through. And I was lucky. I was lucky some of the time. I was smart some of the time. And I thought, Marcus, if we've got time today, I thought I'd tell maybe one or two stories about some things that I did as a trader at those beginning stages that might communicate some of the lessons that I learned early on that were really important. Does that sound reasonable?
That sounds fantastic. Go ahead.
All right, so I'm moving along here for the first 3 years of trading. I started in the year 2000, and I'm going along in these first 3 years. And this guy comes along, Marcus. He sends me an email. By that time, I'd written an ebook or two, and I didn't have 1,000 people or 500 people. I had 50 people who knew who I was. And this guy writes me an email. He says, "Hey, I read something about you online, and I want to share something with you." And it was that way, Marcus, when somebody comes up to you and they're like, "Hey, psst, I got something I want to tell you, but I don't want you to tell anybody else." It's like the biggest trading secret in the world, and they're afraid that it's going to get out. And my first reaction was what it is now. Oh, geez, really? The biggest secret ever? Really, whatever. And he said, "No, listen to me. We've discovered that we could build an automated trading system that runs on this particular broker's platform. And we've discovered that when, I'm going to draw something on the screen here, Marcus, to make. We've discovered when price spikes upward real quickly, we've discovered that we can send an automated request to that broker's servers. And imagine now you've got this. This is good. You got to hear this out. This is crazy stuff. Imagine you've got this spike that goes up. And don't you wish when you see this spike that goes up? Sorry, I just drew through your face. Don't you wish that you could buy in at that price that it was at down here before it jumps up here? I mean, everybody wishes they could do that. Well, this guy Nick tells me, "Rob, we figured it out. We're doing it." He said, I can't believe it, but we're actually sending about 1,000 orders a minute to this broker's servers when that spike occurs. And we're getting in at this price down here. And immediately after we take the trade, the price is already up here, so we're just exiting." And I was like, "Are you friggin' kidding me?" So anyway, I'm thinking to myself, well, he did have a secret. It's the first time I've ever heard that somebody would have a secret, Marcus. I'm like, oh my gosh. And, Marcus, does that sounds, that's ethical.
There's the Holy Grail right there. Yeah.
It's the Holy Grail. And I'm thinking, oh my gosh, this is so fantastic. I was so excited, for a minute, and then I thought, well, this is never going to, it really can't work. So I said, "Nick, you're going to have to send me something more than this." So he sent me 3 days of broker statements from this broker. And he showed me the statements. And it took, there were hundreds of trades per second, and at the end of the day, there were like 5,000 trades. 5,000 trades a day sent automatically. He put $1,800 in the account, and every day at the end of the day, they had $18,000 at the end of the day. And I was like, "What should I do?" And I said, "You should turn that sucker up. You should really pounce on that opportunity."
So it was true. He really jumped ahead of a trend, and he was able to capture this move.
Yeah, and because he was using MetaTrader at the time, and MetaTrader would accept an automated strategy that asked to open a trade outside of the market price. Well, 999 out of 1,000 trades, Marcus, were rejected. But
Okay.
he only needed one to be accepted. So he sent them, 20,000 requests and got filled, a small portion of the time. And it occurred to me, A, this seems freaky. Are they going to come to my house? They're going to tear down the doors? Are they going to arrest Nick? Are they going to take everybody away? Number two, how long is this really going to be able to go along? Number three, and all of a sudden you got a flood of questions, a flood of doubts, a flood of, oh my gosh, whatever. And you really actually, when given something and shown something, even the evidence that it was working, the temptation was to say, oh no, it's just not going to happen. I'm not going to do it. Well, we did. We did it. And we made a big fat pile of money. And one day, it was just 3 or 4 days later, Marcus, the whole thing stopped. The MetaTrader platform went down, and we couldn't log into MetaTrader. And we were like, oh, they found it. We got busted. It never worked again. And we closed the account and moved on. Well, here's the rest of the story, Marcus. In 2008, I was hired as the chief currency strategist at Interbank FX, one of the largest and most well-established currency brokers in the world. And I'm in a management meeting at the very beginning of the time that I'm just interviewing for this position, Marcus. Mm-hmm. And they said, well, tell us a little bit about your background. And I said, well, I got a story for you. And I told them the story of when I ran this thing and I discovered it and blah, blah, blah on their servers. And it was at Interbank FX. And the whole room went silent. And everybody just got quiet. And someone looked at me and said, Rob, you busted the entire brokerage. All the servers, you overloaded them. It crashed the whole company for 3 days. We couldn't move money in. We couldn't move money out. We couldn't establish a liquidity connection. And the whole room went silent. And I thought, oh, geez.
So when was that, Rob?
What's that?
When was that?
That was in 2008. It was 5 years later after it had been over for quite some time.
Wow.
And so I said, well, the reason I'm here today is that I can help you make sure that never happens again. that was my big takeaway for them. And I realized, well, I look pretty stupid telling the story to the people whose servers I exploited and broke. But the lesson for me, Marcus, was this. We're oftentimes confronted in trading with something that looks too good to be true. And I don't mean too good to be true in the sense that somebody promises you or guarantees you returns. I'm just saying that sometimes in trading, and I've been speaking to traders for a long time now, so have you, sometimes we're presented with something that works. It can be verified. And we walk away from it because it's just not going to work that way. Or it takes too much time, or it takes too much effort, or whatever. And I realize how important it is to take advantage of opportunities, whether they're in the market on a daily basis or whether it's overcoming our fears or our reluctancy to get up early or whatever it is, how important it is when confronted or given something that has a possibility of working, how important it is to take advantage of that, to not let that go by and to give it a try, even though it looks too good to be true. So anyway, Marcus, that's my first story of the day, it just goes to show you, don't brag about breaking your broker's servers if you're interviewing for a job.
There you go.
Please don't do that.
So fast forward, because you said, well, it took you quite a few years to figure the whole trading thing out, but eventually you did, and you're doing fairly well. You're happy with the results that you're achieving right now. So let's talk about the markets that you're trading. I mean, in the intro, I briefly mentioned it, that you are a forex trader. That's what you mainly trade. You're trading the currencies.
Yeah, right.
Why is that? Why forex? Yeah.
Yeah, I'm a commodities trader.
Was it always from the very beginning, since you got into trading? Why have you chosen forex as the market for you to trade?
Well, it's a great question. For about the last 10 years, it's been my primary focus. I'm a commodities trading advisor, and I do trade forex in my own account and manage some family and friend money, and so that's been my primary focus. Forex was my focus because of liquidity. I was in and out of the market pretty quickly and didn't have limit down, limit up, or any of those problems. I wasn't influenced by gaps in the stock market after earnings reports the next morning or some of those things. Originally, Marcus, people would say, well, your money's not protected, or your money's not segregated, or your money's not separated. We found out that that was actually true of MF Global. It's not actually,
Hmm.
it doesn't actually necessarily only happen to one kind of market. There are risks associated with brokerages. And so I didn't really ever worry about that, Marcus. I generally chose to work with firms that had a significantly large balance sheet, or companies that I was able to tour or go see or check their financials or whatever else. And I really liked the speed of the market and the liquidity in the market. I really liked that, and so that was a primary focus. Now, come to find out, years later, that many of the things that I chose to focus on or do, Marcus, apply very easily to the stock market and the futures market as well. So I spend a significant amount of my time in the courses that I teach, or in the charts that I watch, when my own trading or in the trading that I help other people do. I actually watch the equities markets and the futures markets as well. So you're looking at a screen right here, which has about the components of the S&P 500, for example. And I spend a considerable amount of time also looking at the equities markets as well. And everything that I do sort of directly applies to those markets also.
So even though you mainly trade the forex markets, the principles and the strategies that you use, you would say, could be applied to other markets as well, like the stock markets or the futures markets.
Yeah, we have about 400 traders right now in the group of people that trade the methodology that I wanted to spend some time sharing with everybody today. And those traders primarily actually trade equities. They're mostly equities traders. About half of them are not equities traders. They are, in fact, forex traders or futures traders. And about half of those traders on the equity side are options traders, and they use the techniques that I teach. So futures, equities, stocks, and options. And so I'm looking at all of those financial instruments during the day, although all of my personal trading is going to occur in the forex market. I love looking at this stuff. I just love it. It's like I get up in the morning excited to look at it. I get up in the morning excited to see what's setting up and which things are primed and ready for a trade.
So would you categorize yourself rather as a day trader or as a swing trader?
Well, I've gone back and forth over the time that I've worked. I have 60-minute charts, which are trades on this methodology, the oscillator methodology, which take between 2 weeks and a month to a month and a half to complete. I would consider that swing trading or longer-term trading. But I focus my attention primarily on the 5-minute charts. And these are trades that are complete within 7 hours to 12 hours generally. So they've got a shorter lifespan or time frame on it, whether they're equities trades or whether there's forex trades or whatever else that they are. Some members of our group trade the 1-minute chart, Marcus, and that's very short term. And others trade the 15-minute charts, which is somewhere right in the middle. And so it's a variety of things. I'm more of a 1 day at the most kind of trader. I like to have resolution to the trade that I'm in within a day, at the most maybe 3 days.
Okay, so I mean, if you look at a typical trading day, what do you say, how many hours do you spend in front of your screen? I mean, do you watch the markets all day? Do you have alerts set up? How do you deal with that? How do you do that?
That's a great question. So what I do is I'll start here. Maybe I'll just take everybody through an example of what one looks like and then go from there. This is the website homepage for the group of traders and for this trading system in particular, the oscillator. And the oscillator is a measurement, Marcus, of the length of time that a financial instrument has spent in the midst of a trend. And my whole day starts either on the radar screen, which is available on the web, as you can see right here. There's a radar screen in my TradeStation charts as well. And actually, this radar screen also shows up as an app on my phone. So I have access to this radar. And so I'll wake up and I'll look at this radar screen, and I'll sort the 5-minute chart primarily. So I'll take a look at the 5-minute chart, and I'll expand that a bit so people can see it a little bit better. And I'll look at the currency pairs, or if I want to look at the stocks, I can click up here on stocks. I look at the currency pairs that have shown that they are excessively and preposterously overextended from a statistical point of view. And what the oscillator does is it measures the length of time that a financial instrument has been trending and states that there is a statistical probability that that trend will end and reverse, thus, as you can imagine, setting up a trade for me. The methodology can also be sorted down on the lower side, down in these areas, and it can state that we are prepared for or gearing up for a trend trade. And as you can imagine, Marcus, the market is one big swing from the beginning of a trend all the way through the middle of a trend and all the way to the end of the trend. And the oscillator is simply a statistical measurement of where we find ourselves in that process on a variety of financial instruments across the spectrum at any time. So I wake up in the morning and I'll check out the radar screen and I'll check out this. This is the New Zealand dollar, US dollar, for example. I'll pull up the 5-minute charts here and I'll look at the New Zealand dollar, US dollar. I'll pull this chart up because I've got a reading of 1500 on the oscillator. And what that reading of 1500 shows is that we are likely to reverse. So I think everybody here can see my screen, and I'm going to expand it so you can even see this screen more closely. This is a 5-minute New Zealand dollar, US dollar chart. When the oscillator reading had reached 1,000, and I could see the oscillator at the bottom of my screen. It's a line that can run across the bottom of my screen here, or I could see it on that radar screen that I just showed you a moment ago. When it reaches about 1,000, it's gone, Mark. It's like a statistical anomaly. It's something just bizarre. Like the underpinnings of the universe have become unhinged, and something has gone terribly wrong. And at those times, Marcus, I look at the New Zealand dollar, US dollar, or Southwest Airlines, or gold, or the ES, or the Dow Minis, or whatever. And I say, this is it. This is time for this to reverse. There's a statistical probability attached to this, that once a financial instrument has reached a oscillator reading of 1,000, which measures the length of time that it has been trending, it's more than likely than not to reverse. And so I'll set up a very simple counter-trend reversal trade, which generally has a stop loss, which is 2 to 3 to 4 times smaller than the profit target. And I'll set that trade up, Marcus. I'll put a pending order in for that trade to fire off when it reaches a certain level, and then I'll just let that thing fire off whether or not I'm there and move up toward that profit target. And that's a trade in a nutshell. The radar screen is the setup. The chart helps me plan an entry with a profit target that is generally much wider than the stop loss. And then 7 to 12 to, at the very most, 36 hours later, that trade is over, whether it's, for profit or for loss.
Okay, I mean, we will talk about the oscillator here in a minute, but just in a nutshell. So the oscillator is an oscillator that can range anywhere between 0 to thousands, let's say. And whenever it reaches 1,000, this is when you start looking for trading opportunities, and actually you start looking for counter trend opportunities. So you're looking for a trend reversal. And I don't know, shall we first talk about the oscillator, or how you time your entries here? What do you think is the easier way?
Well, it's really simple to explain both, actually, and I could probably do both you can time me in about 90 seconds, and I'll use this Goldman Sachs chart to do just that.
All right, let's do it.
We'll focus on the counter trend examples, although it does take trend trades also. Here's Goldman Sachs, major investment bank. Start the time now. It reaches 1,000 on the oscillator when this line turns red at the bottom of the screen. I could alternatively have done a search on the online stock radar screen or the mobile app version of the radar screen. Once that occurred, Marcus, I'm going to look for a significant decline further in the midst of that downward trend. And I'm going to say that this oscillator reading that it has produced means that we are likely to see a reversal back upward in this stock, regardless of fundamentals, within a time frame of 12 to 36 hours. I plan an entry by drawing a trend line across the top of the candles in that downward trend. The steeper the better, using general principles of support and resistance trading. You can even use an indicator that draws those lines automatically. I even have an automated methodology for MetaTrader that just draws these lines and takes the trade automatically even. Once I've reached that level, drawn that trend line, I wait for the candle or a candle to rise up above and close above that trend line. My stop loss goes below the most recent low, and my profit target is, and this is what you might want to write down, the 800 period simple moving average. That is the trade from start to finish. So Goldman Sachs reaches a reading of 1,000. It falls further. I draw a trend line. I wait for a break of that trend line. I target the 800 period simple moving average. And that's the whole thing.
Okay, that is too simple.
Okay, I also
because, I mean, one of the things I notice here that you do not have any other indicators on your charts besides the oscillator and the 800 period simple moving average. This was the chart that we were looking at. Is that the chart that you're using for your trading, or is there a little bit more to it? Are you hiding something from us right now? Or do you have another magic indicator that you look at, or is that it? Because that was really too simple. I mean, it was 86 seconds, and you know that I like simple, but if you can explain a trading strategy in 86 seconds, I have to make sure that you're not hiding anything here.
All right, I'm not hiding anything. Let's look at an example of BMY, Bristol Myers Squibb, has reached a reading of 993. We are fast approaching 1,000 on Bristol Myers Squibb. This could be a futures contract, it could be a currency pair, or a stock.
Mm-hmm.
It's almost reached 1,000, so let's just go ahead and draw our trend line. Draw our trend line across the candles here. And through the statistical research that I do, and I have plenty of time later on, and there's a whole course full of information on the statistical underpinnings of this. It's not complex. It's just very simple math, blah, blah, blah. I give you the spreadsheets, the whole 9 yards. Once it reaches a reading of 1,000, it is statistically unlikely that it will go much further than that. Now, it can, but that's fine. I don't mind stopping out of a trade in order to get a big win. I don't care about that. Once it breaks this trend line here and has reached 1,000 on that reading, I'm going to sell Bristol Myers Squibb, theoretically, or whatever financial instrument I happen to be looking at. And I'm going to target that 800 period simple moving average with a protective stop loss just up and above where it was beforehand. So Marcus, that's it. There is no other consultation. That's stop loss up at the $34 area, a target down in the, let's see here, 33 even area, and 75-cent profit target for a 25-cent stop loss. And that's it. It's about risk to reward. It's about statistical likelihoods. It's not about complexity. Now, there are a bunch of different ways you can enter these trades, but this is, without a doubt, the simplest form of entering. It's called the trend line counter trend oscillator trade, and that's it, top to bottom, start to finish, nothing extra, no consultations with an astrologist or Dionne Warwick or anyone else.
Okay, any fancy scaling in or scaling out, or is this where you say all in, all out?
That's a super question. I don't use a time stop on these trades, and I don't scale in or scale out. The leverage restrictions put in place by the CFTC in the world of Forex within the last 12 months have really restricted my ability to pyramid in or scale into a position. So scaling in is really not part of the cards. Now, once the trade has reached 2 points of profit for every 1 point that I risked at the beginning, I do tend to take some of that off the table, let the rest of it run, and certain things like that. But there is no scaling in. So I'm going to take the full position at the beginning. And optimally, Marcus, I'm going to hold that full position all the way to the profit target. I mean, that's the optimal. But you and I both know that skimming some of that profit off the table while the trade is open, they always say nobody ever went broke taking profit, unless they were stealing it or something like that. Nobody ever went broke doing that. So that's pretty much it.
Well, can you run us through a few more examples?
Yeah, I could look at a few more examples. I'd love to see if why are you choosing there to draw your trend line? Aren't they supposed to be drawn from the lows? Just curious. Great question. You can just Google support and resistance or trend lines. Or you can buy the greatest book on Edwards and McGee. You could buy the book, Technical Analysis of Stock Trends, 8th edition. And two technical analysts on Wall Street argue about the validity of a trend line. This is the book they open. And everything I ever knew about support and resistance trading, I learned from that book. It's giant. It has examples of a bunch of railroad stocks in it. And it's boring as you can't believe how boring it is. So that's why I draw the trend lines that I do. I don't think we need a full giant example of that. But that's why I draw the trend lines that I do. Let's look at a 1-minute oscillator trade. This is a great example, Marcus. I'll look at one more trade, and then I got a ton of questions for you. This is Amazon. Amazon recently released the Kindle Fire. Amazon recently sold about 2 million of them or whatever. And despite all of that, Amazon's stock dropped lower and lower, and for whatever reason. Amazon reached a reading of about 900 plus on the boss leader right in this area here, give or take 1,000. So once you get toward that 1,000 mark, we are unlikely to continue that downward trend. If you're a short-term trader or looking at weekly options, or you're just looking at the stock and buying it in a margin account, Amazon's falling, the boss leader is approaching 1,000, and I draw a trend line across the tops of those candles. I could have my program do it. I could have Edwards. I could dig them, Edwards and McGee, out of the grave and ask them to draw it. I could ask my child to draw a straight line over this chart, and they're going to draw it in a reasonably similar place. The buy on this chart comes on a break above this trend line here. Stop loss goes down below the lows, and the profit target all the way up at the 800 period simple moving average. You could just visually compare the stop loss to the profit target, and you can see that. There's a fairly gigantic difference. There's Lulu. This is a stock that seems to go through repeated cycles of getting trashed. They make yoga pants for ladies. This is another example that we looked at in our Boss Leader webinars. A 1-minute chart approaching the 1,000 mark. This could be a stock. It could be a futures contract. It could be your neighbor's real estate value. I don't care what it is. It reaches almost a reading of 1,000. We draw a trend line over the tops. It becomes a buy opportunity. I don't know if Lulu was making more hot pants or less hot pants or less yoga pants, and I don't know anything about it. It's not that I don't care. It's just that primarily there's a statistical lack of evidence that it can go much further than this. Trends tend to last a certain amount of time, and it's uncannily accurate that they can't really generally last more than a reading of about 1,000 on the boss leader. And I spent a lot of time, researching that. And so when it does get close to that reading, I'm going to draw a trend line over the top of those candles. And you, as well as I do, know that the stock market has a buy-side bias, and so it's harder to short sell and all those kinds of crazy things. And so I'm just looking for 2 to 3 to 4 points of profit for every 1 point that I risk, and that's the end of it. And I repeat this process on a daily basis over and over and over again, and I focus on the currency market, whereas other people in our group focus on options or stocks or futures or whatever.
There was just a great question coming in that says, well, your profit target is kind of dynamic, because initially when you entered this trade, your profit target was much larger, but since the 800 period moving average dropped, your profit target dropped.
Yeah, that's so true. And I'll answer that question in 2 parts. Number one, by the time it gets to the 800, it's in almost every one of these instances, it's given at least 2 points of profit for every 1 point of risk. However, the final most extreme profit target is actually the position of the 800 simple moving average at the time that it crossed the trend line that created the trade. So it's dynamic in one sense, that the 800 does move, but the profit target is actually the final biggest profit target that exists on this trade is actually at the position of the 800 at the time the trade was entered originally. And as you can see here, for the boss leader trader who's willing to hold it for that 36-hour period of time, that's about the highest we could go, that the market somehow remembers that level. And it just happens over and over and over and over again. It doesn't work every single time, but when it doesn't work, you lose a point, and when it does work, you gain 2 to 3 to 4 to 5 points of profit. So I'm gonna cut myself off there, Marcus, and I'd like to ask you some questions since we're both here.
Oh yeah, in a minute. I mean that's fine. We just want to make sure. I mean, since we don't want to jump back and forth between the different trading styles because yeah, I trade a different style. I want to make sure that that we also give the audience here um, an opportunity to ask any questions around this particular trading style because I'm really intrigued by it. You know that I love it. I mean, first time when I saw it, I thought, wow, I love it because it's simple. I mean, it's really hard to screw that up, right? Because you're not looking at too many indicators. And
Yeah.
this is a little bit, for those who have been visiting my webinars, know that there was a time in my trading career when I like to make things really, really complicated by plotting a ton of indicators on my screen until I
Hmm.
suffered analysis paralysis and couldn't pull
Yeah,
the
sure.
trigger anymore. Now I've simplified my trading, and since I simplified my trading, it has also been much, much easier for me to spot trading opportunities and to enter a trade because it becomes more black and white. I mean, like here, you said usually you start looking at an instrument, whether it's a stock or whether it's a commodity or a stock index or a currency pair, when the oscillator reaches around 900, because you
Yeah,
usually
sure.
know that around 1,000 something happens, right? So
Right.
you start
Exactly.
looking at a few bars ahead, and then you just draw a simple trend line. And I noticed that you're just going back over a rather short period of time. I mean, you're not drawing a trend line over the past few days.
Hmm.
I mean, looking
Exactly.
at the 5-minute chart, you're probably drawing a trend line over the past somewhat like 2, 3 hours.
Yeah,
Am I
that's
correct?
absolutely true. Yeah, in these cases, if you're looking at a longer term chart like Goldman Sachs, your trend line's going to stretch over 20 to 30 candles. So on a 60-minute chart, that's going to be 20 to 30 hours. On a 15-minute chart, that's going to be 20 to 30 multiplied by 15. And on a 5-minute chart, it's going to be 100 minutes.
Mm-hmm.
In some cases, it can be even a shorter term trend line over the course of 10 to 15 candles. But the statistical reading that we've got trumps everything. So that statistical reading that we receive on the radar screen, for example, that's really the focus here. So if I go, I update this every night, for example, the stocks radar. So I'll go to the stocks radar here, and it's going to take 1 hour and 32 minutes. So here you go. Here's the stocks and futures radar on the web, and you can view it in a mobile browser, you can view it on the web. And I could just search for counter trend buy. I can look at all the instruments on the 60-minute chart on down to the 5-minute chart and the 1-minute chart, and I can look at all the financial instruments that have a oscillator reading that is showing and approaching that 1,000 mark. So some have reached further than it. Monster Worldwide is at 1556. Goldman Sachs is 1207. Bank of America is at 1192. So I can quickly jump through financial instruments that have reached a statistical reading that seems unlikely to continue. Or if I'm in the mood for trend trades, I can type in trifecta, and it's going to show me the trend trade strategy. It's going to show me the financial instruments that are prepared for a trend trade setup. And recently McDonald's was the big trend trade, and that worked out great. So there are both types of trade, but they're always going to be really similar. It's all simple stuff. Like, I'm not smart enough to figure out anything more complex.
Do you have a bias towards long or short trades?
Well, in the stock market, I really prefer the buy trades. I know that short selling can be extraordinarily profitable, and I know that if you chart the boss leader on penny stocks, for example, and you look at pump and dumps, the boss leader is one of the greatest timers of pump and dump stock collapses known to man. But I don't want to call my broker and try to cajole them into short selling stock, and I don't want to make a business out of dumping companies. It just sounds so terrible. So I have a buy side bias in the stock market simply for that reason. I like the buy side. It's simpler to do. I can reflect my trade in the form of an option if I want to. So I could take McDonald's as a trend trade opportunity, and I can look at a boss at a reading and set up a trend trade and buy a call option with a specific expiration date and a specific strike price. And I can look at the market, or I can just outright buy it, and I can just have a buy-side bias. So I like the buy-side bias in the stock market for those reasons. But if it's a commodity or if it's a forex, if it's a currency pair, I don't care. One way or the other. I don't care if I'm trashing the euro. It's a country. I don't care if I do that.
Yeah. Are you currently in a trade?
No, I
any
have
trade
no
right now?
open trades. No, I have no open trades right now. The next trade that's setting up
Yeah,
was that
that
New
was
Zealand.
my next question. Are you watching a trade right now? Are you waiting for a setup that maybe occurs this afternoon or tonight?
No, this is the most frequent trade was the New Zealand dollar, U.S. dollar, and I don't even have the balls to stay in these all the time for the full profit target. Once I get to 2 to 1 or 3 to 1, this thing is over for me a lot of times. So this one's even over, and nothing else right now in the forex world, something that I would particularly trade right now, is setting up. Although in the world of equities and other stuff, there could be a
But
whole
let's go
bunch.
back to your website because you said that you had the free oscillator calculator there.
Yeah,
So and this is no, not that one. Yeah, the FX Radar, exactly. And that's on
yeah.
oscillator.com.
Yeah,
So
if you go
if
to
you go,
bossleader.com or bossleader.com/course, COURSE. So you can go to
okay.
bossleader.com or bossleader.com/course. You can actually see the radar screen and see what financial instruments are setting up for you right there. And what I'll do here is I'll make sure that this page here for the stocks radar, for example, while I'm interviewing you a bit, I'll make sure that page is not protected and that anybody here that's in the group or on this webinar right now, make sure that they're able to jump in there and check that out. No problem. And I'll leave that open for days. So you got plenty of time to go in there and check it out and take a look at it. And, you can even download. I even make that available for download, so you can actually go right on that page and download the whole thing to a spreadsheet. So
Let's go back to the FX Radar for a minute because besides the I think it was US versus New Zealand, there were a few others that were in this red 1500 area or even in the yellow 1000
right.
area, but you're not excited about these. Why is that?
Well, it's not that I'm not excited about them. Let's check these out. I have a feeling that most of them are already. The New Zealand was my focus today, and some of the other ones that have a reading that is excessive, like 1,000, have already started on that trek upward today, and so those trades are near completion. So that's
Hmm.
the only reason that you might check something. And question number one is it setting up? Question number two is there still a trade that I can take with a reasonable risk to reward ratio? So
Right. Or
everything goes
did
in
you miss the
cycles.
entry? Hmm. Okay.
Yeah, right. So I pick one that I really like. I focus on that, and then I just kind of let it rest. I put it to bed, and that's the end of that.
So
Anyway.
did you find that there are particular times throughout the day when you get more trading opportunities than other times in the day, or is it basically during the whole 24 hours?
It's a 24-hour methodology, and of course I don't stay awake 24 hours a day. I just pick a set of hours that I'm going to make myself available for the market. There's so many financial instruments in the world. There's always something setting up. So I pick during that set of hours that I've agreed to watch the market. I'll just pick a time and I'll set it up, and that'll be that. If I miss something, if it triggered overnight, that's fine. I do have automated versions of the methodology that run on MetaTrader, which are part of the course, for example. And there's a version of it called the surprise box, for example, and it runs 24 hours a day, and it's the winners or whatever, blah, 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 blah. And that is allowed to run all the time. It's
But you're
allowed to
not
run.
crashing any servers with that.
No, unfortunately not.
Okay.
No, I wish. I wish. I would do it in a heartbeat. I would have no problem doing that again.
Do you actually have this EA running on one of your accounts, or do you rather trust your instincts when it comes to trading?
That's a great. I have never before run a robot on my own account, and just recently had a version of the code that programmed together with Chris Davison, my programming partner, and I. We sent it to my broker FXCM, and they are hard coding the methodology for the platform so that I'm able to run it, and I will run it on my own. We could do another webinar someday and watch that thing fire off stuff live, and I will monitor it. So I'll watch it implement my own brain logic. So
Hmm.
it's just my brain. It's just an objective set of rules, and I'll watch it. So I'll monitor it. I'm certainly not the type of person who would just let it run and forget it or whatever.
Now, I mean, you said that there are so many instruments, there are so many time frames. What is your preferred time frame? Is it the 5 minutes that
Yeah, it's the 5 minute. Yeah,
it's
no
five?
question. Yeah, absolutely.
So, I mean, with this, you should get so many trading opportunities. Do you look at anything else? Are there any other strategies that you're testing out, or is this your main focus? I mean, I don't
This
want
is
to
my
run through
thing.
more strategies. I'm just curious
No,
if
this is
there's.
my main focus. I have other strategies, and there have been, as you know, there are tons of methodologies that work. This has really become something that people latch onto quickly, learn quickly, understand really fast, and it makes it easy to teach. It makes it simpler to get through. It's not a bunch of different things all lined up, and it's not a bunch of different questions that someone has to ask. It's very objective and rule-based, so it's got all those elements to it. And because I spend a lot of time talking to traders about what I do, it's easier for me just to do this and then show what I'm doing. So yeah, there's nothing else. There's nothing else that I'm running currently or anything else like that.
Well, Rob, a question that I frequently get. I mean, this sounds really simple. You just shared it with the whole gang here. I mean, we have several hundred people in the room here. On your website, you have the FX radar. So, first question, if it is so easy, why is not everybody doing it and making a ton of
Well,
money?
that's a really good question. There's no good answer for that except for I am now determined that I'm going to spend some time interviewing you. At the conclusion of our time together today, at about half past the hour coming up here, if you click on Learn More on the home page of the Boss Leader, you will be taken to this page right here, and and you can just go to the home page of the Boss Leader, and I will answer additional questions like how does it calculate things, why, I didn't just teach all 7 different methodologies for entering the trade or whatever else. So there are, to be completely transparent, Marcus, I can help someone go a step further beyond what I just said. I mean, I can take someone further than what I just talked about. And of course, some of the stuff that I do is free, and you can just use it on your own. And please, by all means, like let it rip. I would be happy to see that. And then there's some things that just take a little bit longer to teach. And some of those things I do charge for, and they don't ever cost a whole lot of money. But some of those things I do charge for. So I'll be on later on, and I can talk about some of those questions. But I'm gonna cut myself off.
Yeah, but there was just one follow-up question that I had to
Yeah.
ask. So let's just assume that everybody says that this is just awesome, this is so simple, this looks fantastic, I want to do it. Couldn't it be that if now the whole world does it, that it stops working? I mean, if
Well,
too
as soon
many
as I
traders are jumping on it, that this method or this strategy stops working, because that's one of the questions that I get all the time, Marcus. Why do you share your strategies? Why do you put them out on the
yeah.
internet? Why are they available on YouTube? I mean, now if everybody is trading it, don't they stop working? So what do you think?
Well, the answer to that is we're not doing arbitrage here. We're not buying corn in Topeka, Kansas, and selling it in Rochester, New York. We haven't discovered a price discrepancy that will be erased immediately. In fact, once I buy the New Zealand dollar, Marcus, if I could get myself back on CNBC and tell everybody in the world to buy the New Zealand dollar, you better be sure I'm going to do it. Like, I want everybody in the world to do the same thing. I want that when the Boss Leader reading gets to 1,000, I want everyone in the world to join me. And the Forex world is so liquid and so huge, no one person is going to move that market for me. Nobody. It's never going to happen. No one's ever going to have $50 billion to drop on the market to get me out of that trade. And so the answer is we could have 10,000 people looking at this, and all it's going to do is carry your trade to the profit target more quickly. Now, if you discover that you can break your broker's servers with a trick, don't share that with anybody. That's a different story. You don't give that away because they're going to shut the servers down. So let me ask you, Marcus.
Okay. Hey, I'm not going to ask you something, just one comment, because there was a question
Yeah.
coming in where Colin said, how much is the FX Radar to get hold of, please? Guys, there's nothing for sale here. I mean, the FX
Yeah.
Radar is available for free on Rob's
Yeah, it's free.
website. So
Right.
this webinar here is not a sales pitch. I mean, we are
Right.
here to share what we are doing. As Rob said, we have our websites. So bosselator.com/course is Rob's website, where you find a ton of free resources. And then, yes, there are also some paid resources if you want to get into this. But nothing of what we shared thus far requires you to purchase anything. No
Yeah,
purchase
right.
necessary. I mean, this is something that you can use in your trading right away. And
Yeah,
this is what I love about Rob, because he has the same mindset as I. After a webinar, if you invest an hour or maybe an hour and a half into us, because it seems that we're running a little bit over time, if you're investing this time in us and hang out here with us, we want to give you something that you can use in your trading right away without spending any more money, because I understand that thus far you have probably already spent a lot of time and money to learn about the markets. You might have bought already several courses. You might have visited seminars. You might have traded and it didn't work out, and so you lost money in your account. So our mission here
yeah,
today, and in many webinars that we do, is to try to help you get back on track, try to show you something that we do and hope that it helps you in your trading. And we know if it does, that you'll come back to us and say, all right, now teach me more. Take me by the
yeah.
hand and
That's
show
so
me the
true.
next step. And this is
Yeah, and
where
those
then we have
pages.
advanced
And I had
program.
some, and I saw some comments in there, Marcus, from people who said, "Oh, wait, I clicked on those radars and they weren't available. They are now. I've unprotected them. They're totally available. You can go check them out."
Okay, okay.
And okay, so here's my question for you. Uh, let's let's ask you the same question you asked me to begin with. You you got started in trading after having worked in the corporate world and just busted your rump to travel constantly. I mean, you were traveling how many days of the week?
6 out of 7. And this is when my boss actually had a fantastic idea how I could work on Sunday. So just very briefly, yeah. I mean, I was working for IBM. I was always fascinated by trading. I mean, this is what you see here on the website, my story, that I did my first trade while I was still being in high school. But this was back in '89. And when I told my parents that I want to become a trader, that didn't go over very well. So my dad said, "No way, you go to college and you learn a real job." So
Mm-hmm.
I did. I went to college, and after this, I took a job in the corporate world and climbed the corporate ladder rather quickly. So I was working for IBM. While doing this, I was still hooked on trading all the time. I kept looking at the markets. I kept drawing my charts. But yeah, then there was a time when my career at IBM really took off, and I had a responsibility for what they call EMEA, which is Europe, Middle East, and Africa. And having a responsibility for this region means that you are on the road a lot. I mean, I must say this was yeah, in my early 30s, so
Mm-hmm.
I was living the dream. I mean, this was during a time when, I mean, travel was still lots of fun. Traveling business class, security at the airports wasn't as tight as it is right
Mm-hmm.
now. So travel was fun. I stayed in nice hotels. I had fancy rental cars. I visited every single country and most of the cities in Europe. So it was fantastic. However, I came home on a Saturday, which was usually Saturday afternoon, and had to leave again on Sunday evening. If I was lucky, I could leave on Monday. And the only reason why thus far I had Sunday off, I mean, I was in sales and I was bringing in a lot of money for IBM. I think before I left, it was around 200 million a year that I
Mm,
brought in
wow.
revenue. So they treat you well. And so this is where they obviously try to get as much time as possible. And one of the reasons why I wasn't working on Sundays is because nobody else did, right? I mean, I couldn't visit any clients. When my boss finally discovered and said, you know what? I actually heard that in the Middle East, the Sunday is like our Monday, right? I mean, so
Oh
there
no.
are some countries in the Middle East where they're open, they do business on Sunday. So why don't you go there on Sundays? And this is when I decided, you know what, I need to get out, because honestly, if you're on the road 6 out of 7 days, it's not that you don't have time for friends anymore. You simply don't have friends anymore, because you get invited to parties, or you get invited to get together in the evening, and you always have to politely decline and say, no, I'm right now in France, no, I'm in Spain, no, I'm in England, I can't make it, and until they stop inviting you. I mean, what's the point of inviting somebody who always declines and then says, I'm not in town, I'm out of town, right? And so this is why I started realizing, although this was a very, very well-paid job, it's not what I wanted to do, because I believe that there's a huge difference between being rich and being wealthy. So for me, being rich means that you have a lot of money. And I mean, there was no doubt climbing or making this career, I did have money. But the difference between being rich and wealthy is that when you're wealthy, you actually have time to enjoy the things in life, right? And so this is what I was missing. And this is where I decided, no, I got to get out of here. I got to do something. And so I did it radically. I mean, I quit my job at IBM. I packed my stuff, moved from Munich, Germany to Austin, Texas, okay, to become a full-time trader. And fortunately, I had some savings, so I could survive for some time without an income, but I knew that eventually I had to make some income, so I had put some pressure on me. Now, do I advise people to do this? No, it's probably not the smartest thing to do, right? So, and just packing all your stuff, saying goodbye to everybody, goodbye to friends and family, and move 12,000 miles away. But it was something that I wanted to do. It was my dream, and I was determined to make it work. Unfortunately, very similar to most traders, it didn't really work in the beginning. Yeah, I already had some trading successes, but it often happened that there were a few days or maybe even a few weeks where I gave back most of my profits. So it seems that the stuff that I was doing was working for a while, and then it stopped. And so what I did is I just bought more courses and visited more seminars and visited more webinars and just invested more money in my trading education, trying to chase the Holy Grail, just to figure out that any automated systems or any automated strategies just work for some time, and after this you start from scratch. And this is when I realized a few very important things. So one of the things is that as a trader, you have to find something that works for you. So this is why is not everybody trading the Oscillator right now? Well, because that's a specific strategy that works very well for you, Rob, but somebody might look at it and say, yeah, you know what, that's not really what I want to do. I'm looking for something different, which is absolutely fine. And so I started to simplify my trading. I started to find my own style, incorporating everything that I've learned thus far, and also learning from my mistakes, where I said, well, it was quite expensive, but I made a lot of mistakes, so I need to learn from them and not to repeat them. And so this is how eventually it clicked, and I came up with a way to trade, how I trade today. And maybe I should share my screen.
Yeah, so I'd love to turn that over to you. Let me do that right away here.
Oh, I just grabbed it from you. That's fine.
Great, you got it. You're a pro. Most people I do a webinar with say, I don't know how to make it my screen. You got it.
How do you do it? How do I do it? So, this is now how my charts look like, and I'll explain you what you're looking at. And one of the most significant changes that I made in my trading is that I'm now looking at range bars versus what you see on the left-hand side, a simple time-based chart. Here we see a 5-minute chart. So until probably 6 or 7 years ago, I've been trading on time-based chart. And you know the idea. If you're looking at a 5-minute chart, we just talked about it, a new bar or candle is plotted after a certain amount of time has elapsed. In this example, 5 minutes. So the problem that I had with these charts, I'm a big believer in indicators. You see, when you're looking at charts, you have two ways to trade charts. You can either use indicators or you can use chart patterns. And I mean, you might be familiar with chart patterns like head and shoulder formations, or pennants, flags, all this kind of stuff. Even if you're looking at candlesticks, you're looking at chart patterns, because you want to recognize 2 or 3 candles, and this is where you have a chart pattern. Now, what I noticed for myself, I'm fantastic. I'm great in identifying chart patterns at the end of the day. So right now I can point at every chart pattern that was there throughout the day. However, I really suck identifying chart patterns, why they form. Okay, so for me, it is extremely difficult. To me, it leaves too much room for interpretation. To me, it is easier to work with indicators. And I personally know, no, I shouldn't say that I personally know, but I know 176 indicators because I've my book here, the big book of indicators, that I read many, many years ago, and I tried most of the indicators there. And so I'm a big believer in indicators. Now I'm down to 3 indicators, but here's one of the problems that I noticed with indicators on time-based charts. And let me write this down. Most indicators that you're using, most indicators are based on the closing price of a bar.
Yeah, that's the way I know about them.
Yeah, I mean, there are different ways, but most indicators, it doesn't matter whether you use a moving average or whether you use Bollinger Bands or MACD or RSI or stochastics. I mean, most indicators are based on the close of the bar. Now, when you are using a time-based chart, you have something like this happen quite frequently. So there is a time when the market is rather quiet, as it was here in the past hour while we did this webinar. So these are all 5-minute bars, and you see how these bars are getting really, really small, narrow range bars, and then something suddenly happens, and boom, the market starts exploding. And we don't need to do the end of day updating here right now, so let me move this out of the way. And we had this earlier. You see, we had this, whoa, one big strong move, and then prices were wiggling around here, and then we had another strong move. So what happens if you have this one long bar? You see where it closes? Might be a little bit hard to see, but it closes right down here.
It's totally, it's easy to see. It looks real good.
Yeah. So by the time you get the close, and most indicators are based on the close of the bar, and the indicator is telling you something, what you're supposed to do, this move is already over. So this is why I started looking at range bars. So what are these strange range bars? Well, first of all, the range bars, they have all the same length. And in this example here, it doesn't really matter what chart you're looking at. I mean, here, right now, we are looking at crude oil. And so the setting that I use in crude oil is 20 cents per bar. So each bar is exactly 20 cents long. I'll just quickly double check here and see if I'm actually telling the truth. See, the low of this particular bar here is at 93.75, and therefore the high of the bar has to be at 93.95.
20 cents.
And so they have all the exact same length. So we are taking the time element out of the market, and instead of looking at a bar every 5 minutes, we're looking at a bar after the market has moved a certain amount. So here, I don't care when the market stays within a 20-cent range, I'm not getting a new bar. So you can see beautifully here where we had all this for me, it's just crap that's going on here. I mean, that's something that you cannot trade anyhow, these small bars. I mean, there's no way to trade them. Let's just quickly look at some times here. So when all this kind of stuff started, this was here at 3:30 Central Time. So let me mark this. So this particular bar here was at 3:30 p.m. and that's Central Time. And after this, not a whole lot was going on. I should remove some of the arrows, otherwise it gets all cluttered. Yeah, well, I wish I could do that.
I like it.
Anyhow,
it's exciting. I like it. Keep them there. It makes me excited to look at all those little bars.
Yeah. So at the same time, at 3:30, that's basically this bar. This particular bar here started at 3:05 p.m. and lasted until, let me look this up, till actually 4:15. So this bar lasted an hour. So for an hour, I didn't get a new bar, and therefore, obviously, no signal. But why would I? There was nothing to trade anyhow. And so this was very important to me to find something that gives me an edge in the market. And you know, Rob, that's what we are looking for. We all look for an edge in the market.
Yeah.
As traders, we want to see something that other traders hopefully don't see. Like your story in the very beginning. this guy found something how you could jump ahead of a trend, right? And that's what we try to do.
Yeah.
This is what you try to do with the Boscillator. You try to identify a counter trend opportunity in the market. And so I'm using these range bars by, I don't know, trying to find an edge in the market here.
Well, it speaks to you, right? It appeals to you, and because it appeals to you, you
Right.
make something from it that works for you. And just visually, Marcus, to repeat what you said, and I love it because it's a smoother moving bar. It's avoiding all the nonsense. Like, if nothing happened, why create a bar? Like, what's the point?
And you see, I'm trying actually to talk to these charting software packages to call them German bars because I like the idea, because they're so orderly. You see, this whole move that we see here, I mean, yeah, it's also
it's
a quite okay move on a 5-minute chart, but look at it, how nice and orderly it is on these range bars here.
Yeah, I would call it a candy bar. I'd call it a candy bar. There's a question that
German order.
There's a question that keeps coming up, and I don't know how to answer it. And it could be really quick, and I prefer that it was actually, because I don't want to distract you from this. Everybody seems to be asking questions about Renko bars, and I don't know a Renko bar from. I don't know it from anything. Does this have anything to do with Renko? I mean, I've seen a Renko bar before, but I never went in
related. It is related to Renko bars, and it is related to point and figure charts. I mean, in the very beginning of my trading career, I used point and figure charts. These three types of charts, point and figure, Renko, and range bars, use the concept of volatility-based charts. You see, you have these three ways how you can plot prices on a chart. First, you have time-based. This is the typical 5-minute, 10-minute, and so on. The next one that you have is volume-based, and when you look at volume-based bars, this is where you look at 377 ticks, for example.
Ticks or whatever, yeah, right.
So, and then the third type of bars or charts is volatility-based, and that's the one that I'm looking at. These are the range bars, or sometimes they're called momentum bars.
What about singles bars?
Singles bars. You shouldn't. Okay, we don't go there right now. They might be called breakout bars. So these are all names for these volatility-based charts, and this is actually where you also have the Renko bars. Let me just remove this little arrow here. It's kind of distracting. So I know that we were running a little bit over here, and again,
we're doing great.
We want to give you something that you can apply in your trading right away. What I challenge
everybody wants you to stay on. Everybody's asking questions, so we definitely want to hear you continue.
So okay, so what I challenge you to do, if you're in the room here, is if you're using any type of indicator to determine your entries, and I'm not talking about the Boscillator because that's something else, but any other type of indicator like Bollinger Bands, like MACD, like RSI, just use range bars and see if it changes your entry signals. What I found in my trading is that it gives me much cleaner entry signals when I'm using range bars, and this is why ever since I started using these range bars, I never looked back. People ask me all the time, well, it's not available in my charting software. Can I use something else? Well, you could. It's all up to you, right? There's a reason why I use range bars. Again, I believe that they're giving me an edge in the market, and let me take a look at the price action in a way that very few traders do. Because if you look at the 5-minute chart right now, you might say that this market is in an uptrend. But looking at the little bit larger picture with range bars, we're still in a sideways move here right now, and especially around this time of the day, crude oil, I would argue that we are probably going sideways, and I'd rather wait a few more bars before jumping into a trend. Because if you look at it at the larger picture, I mean, once you see that a trend starts, you might as well wait a little bit, because if you jump into a trend too early, if you try to get into a trend right here, you're frequently getting stopped out or whipsawed. So wait for the really clean and longer trends before considering an entry. Okay. no, I think that's a great idea. Jackie's asking, could you apply the oscillator actually to range bars? We never thought about that, right? We
Yeah,
never tried that. We never
it's as a
tried it.
matter of fact, it's exactly what I'm going to be doing at the conclusion of this webinar. I'm going to be looking at range bars and oscillator, because what we're looking at here, imagine for your moment on the screen here, you've got this downward movement in red in the very middle of the screen. You've got some movement upward. You know, I'm looking for a breakout above toward a profit target above, theoretically here. I don't know where, you know, blah, blah, blah. But a breakout of a range bar is so clean. It's wonderful. So I definitely am going to spend some time looking at that. I always love a new idea. I always love looking at something that maybe from a perspective that I'd never considered.
Yeah.
How does somebody get range bars, Marcus? How does somebody get a range bar indicator?
Well, it depends on your charting software. Again, on some charting software packages, they're called range bars. On TradeStation, they're called momentum bars. Sometimes they're called breakout bars. And since very few traders use them, they're usually very well hidden in your charting software, because I would say out of 100 traders, there might be 5 traders who have ever heard about range bars. So it's not very common. So if you don't find it immediately, just contact your support desk, and they can probably tell you. Just say, hey, you know what, I want to use range bars or momentum bars. Do you have it? And usually say, oh yeah, let me talk to Joe about this, because nobody's ever asking about it, and he's the specialist, and they will tell you.
How did you come up with 20? How did you come up with a reading of 20 on crude oil, for example?
Well, I have a setting for each market here, and I determine this based on the average daily range. So I'm looking at the daily range, and then it's this is where a lot of testing goes into. I mean, there's a reason why you're using, for example, for the oscillator, the 800 period moving average, and not 900, and not 600, and not 400, right? I mean, this is where you did some extensive testing and said, you know what, based on all my testing, based on all my trading and all my experience, this is the best setting. So
I love the range bars, and it's something so unique and original. Although it's standard, you know, software stuff that's available, it's a perspective on the market that no one else really speaks about. And I really, this is something special. And now this is crude oil.
Yeah, now let me show you just something really cool, because you talked about the trend line. So because we have just talked about it when you're using the oscillator, right, where you draw a trend line. And again, this is pretty easy. If you draw a trend line, let's say we're connecting these two highs here, when you're using range bars. So let's just assume that there's a trend line. I'm not really great at drawing trend lines, so I probably should get the book here. Here's how I determine when the downtrend is over, and that's that might help some of you who are also not really great in drawing trend lines. You see, you have a downtrend here, and these little thingies that you see here on the chart, these blue dotted lines, are actually Bollinger Bands. So I love the concept of the Bollinger Bands, because you will see that in a downtrend, the lower Bollinger Band is actually acting like a trend line below the prices. Can you see this? Yeah. It's like a trend line below the prices. So how do you know when this downtrend is over? Well, as soon as this lower Bollinger Band starts turning around. Let me just remove this. And you see right here, this is where the downtrend seems to be over. And it's like an early warning signal. Do I draw the trend line here somewhat okay? Is that a trend line that you would draw on this little mini
okay. So there's 3 different perspectives on this that can be communicated really simply. The first 2 are incorrect and stupid, so we're not going to focus on them. The third one is the best one ever. And it is, without a doubt, exactly the way that you drew it. It's perfectly fine. You can draw it. No, I'm just kidding. Trend lines are completely unique to the trader, and that looks great. I would also venture to say that you could draw a steeper trend line than that, even across the candles that fall more sharply across more recent price action, if you really want to get extreme. Earlier entry, tighter stop, bigger profit target.
Okay. Now, if you want to use a counter trend here, and you're considering eventually to go long, as we just saw with Rob's oscillator here, you might wait for a breakout of the trend line here. I mean, this is something that you said. So you would probably if the oscillator was right, and if it had a reading above 1,000, try to enter here at 94.95, and probably place your stop loss somewhere around here at 94.15, maybe something like this. Let's just assume that this was something that you wanted to do. Now, what I would rather look for is after the lower Bollinger Band turns around, telling me that we are no longer in a downtrend, I now would start looking for the upper Bollinger Band pointing up, because this is acting like a trend line above the prices, and this is where I'm considering a long. So I might go long a little bit later, right? But therefore, I mean, during this time, even if you would have entered here, for all this time, however long this is, a few hours, you wouldn't have made any money anyhow, right? I mean, you're just going sideways. So you're making some, you're losing some. I mean, there's not much going on. So this is where I would rather wait until I see the upper Bollinger Band pointing up, and this is what I consider a nice long entry. So really just an idea how I like to use the Bollinger Band and how anybody can use the Bollinger Band. If you plot Bollinger Bands on your charts, and I should probably talk about the settings that I like to use there. So these are the Bollinger Bands, and they usually consist of a center line and two standard deviations. So the center line is usually a simple moving average, and in most charting software packages, there's a standard use of 18, 20, or 21. I like to use 12, so I'm tweaking it a little bit here. Again, trying to find an edge, trying to do something differently than most traders, trying to see something that other traders don't see. But I use 2 as the standard deviation. So Bollinger Bands for day trading, a setting of 12 for the moving average and 2 for the standard deviation. Now, since I am German and I like it nice and orderly, I'm not using the center line, which is the moving average, and therefore I'm not even plotting it on the chart. And you see, as a German, this is already bugging me that there's so many arrows. I mean, I have to clean up my charts. I like to have my charts really clean.
Does it really have anything to do with you being German? Is it really true?
I don't know. It might be genetic. Yeah, I mean, these little things. When my charts get messy, I don't like this. When I have too many annotations on the charts, and this is why you see that my charts, same as yours, are really, really clean. Yeah. And this is what I love about your charts. I mean, there's no clutter on your charts. There are very few things, and these are the things that are really important that you use in your trading. So whatever I don't use, I mean, gets just thrown off the charts. If I don't need certain stuff, it's off the charts. I don't need grid lines or anything like this, so I don't have the grid lines. So.
So do you look at other markets? You trade oil. What other markets do you trade?
I like to look at the mini S&P. I think this is another great market, and you see the same principles
apply. I've heard it, spoken about that. This is the most difficult market in the world to trade. Do you agree with that, or do you think that's just people talking?
The mini S&P is a very choppy market, and especially if you're trading it on time-based charts, I believe that you're getting chopped into pieces. It's getting a little bit easier to trade if you're switching to range bars. But yeah, since it is the most liquid futures market in the world, there are so many traders, and you see when you have a lot of traders, you have a lot of conflicting ideas, right? So as soon as the market starts moving in one direction and starts going down, there's already a bunch of traders shouting, "Oh, the market is oversold. It should turn around," right? And they try to buy bottoms. And so the more people you have in a market, the more traders, the more opinions you have, and the more a market is torn and pulled back and forth. It's like a tug of war that I like to play with my dog. It's a border collie, right? But this is where you're going back and forth, and this is what's happening in the mini S&P. So this, for the same reason, for example, I used to trade gold. Right now, I'm not trading gold, and here's why. I believe it was in September when I was speaking at the Futures and Forex Trading Expo in Vegas, and I hopped in a cab on my way from the airport to the hotel. And you know, the cab drivers, they always strike a conversation, and they said, "Oh, so what are you in town for? Are you in town for fun?" And I said, "No, I'm attending the trading expo." And he said, "Okay, so trading, is it like commodities trading?" And I said, yeah, exactly. And so the cab driver tells me that he is trading gold. Okay, and nothing against cab driver, but you see, if it becomes too mainstream, if you have too many traders jumping into one commodity, and this was during a time when gold just kept hitting new all-time highs, and everybody was just focused on gold. Everybody wanted to participate in this gold rush, and this is when I decided I need to stay out, because if you look at the daily charts of gold, this is when volatility really started picking up, and there was this tug of war of going back and forth and back and forth. So this is why I like to trade markets that are really liquid, but I tend to stay away from markets that everybody and his grandmother is trading, because this is when you have these choppy markets.
Yeah, it makes perfect sense to me that you walk away when the entire world is convinced that it's the best ever. That's a good sign. It's a good sign. I mean, it's the same way I feel about the markets, that when the market has run its course and the trend has run its course is when a lot of people are just getting into it and they're just finding out about it. And that's not when you want to be in it. You want to be in that trend earlier. You can't always get it earlier, so sometimes you miss a trade, but that's the ideal situation. This is oil again. Look at that.
No, that's euro currency.
Oh, it's euro. What time frame chart? Oh, I can see there. I can see euro.
That's the range bars, right? So we're right now at 130, 38. So this is the euro currency, euro versus the dollar, but traded as a futures market. So that's what I do here. I trade the futures market. Tend to trade to look at the E-mini Dow, and if you see and compare this to the E-mini S&P, let me just see if we can bring them side by side. Then you see that. That often the E-mini Dow trades a little bit nicer than the E-mini S&P. So if you look at this morning's trading, often the trends are a little bit nicer in the E-mini Dow than in the E-mini S&P. So if
do they trade days back and forth? I mean, does one day is one day smooth in one and choppy in the other, or can they sometimes be different?
Yeah, sometimes. Usually the Dow is a little bit nicer. What I don't like about the E-mini Dow, it's since I'm trading the futures markets, each tick is just $5, while in the E-mini S&P it's $12.50.
$12.50.
So anyhow, these are markets, and then another market that I really like is bonds. So this is here 30-year bonds.
Do you find that bonds are really very technically and orderly oriented?
Bonds are like an old steam train. You see, bonds, I mean, once they are in motion, and this is what you see here, once they are in motion, they're beautifully trending, right? And then they don't come to an abrupt halt. So very, very seldom you see in the bonds that you have these V bottoms or the V tops. You see, here they're just breaking, like the steam train, and I mean, it's just getting slower and slower and slower and loses steam. And then it starts turning around, and again it turns around, and now goes in this direction, right? And again, although there's a reversal here, I mean, it's not really the typical V reversal that we often see in the stock indices, for example. We just go back to the E-mini S&P. See, in the E-mini S&P, you have often something like this. So you're going down, and boom, you're jumping right back up. So there's the V that I'm talking about. It's the same here. So you have it going down, and then boom, you have it right back up, so there's the V. And these are the things that are killing it, right? So in the bonds, you have more time to get out of a trend, so it's really nicely progressing, and then see you have some time here. It's not really the V, so it's like, I don't know, like a straddle if you trade options, and then you're going back up, you're going back down, so that's another market that I like to trade. Yeah, we talked about crude oil already. And I used to trade gold, but this is right now still all over the place. So right now it's still a market that I'm staying away from.
Yeah, I agree. It's just too much. When it's like real estate was in 2008. Everybody's doing it. It's captured the imagination of everyone in America to the point where if you have a 1-hour program on Fox News, you can't even barely get through the program without 25,000 advertisements for gold coins. Marcus, range bars. You have different settings for different markets, but you found that these really work for you. Someone might find that something else works better for them, but this is really something original that lets you look at the market in a way that not everyone does. And I think it's a point worth repeating and mentioning as we start the process of wrapping this up for everyone is that you want to find a way of looking at the market that fits your personality, that fits who you are as a trader, fits who you want to be and what you want to look at. And you've seen that Marcus's personality type favors something that's a smoother moving bar. Now, something else might be better or whatever for someone else, but Marcus, this really lets you view the market in a really orderly fashion, in an organized way, and I'm just really impressed by how smooth these range bars look.
Yeah, and I mean, it really helped me in my trading, and I know that for tonight we're running a little bit out of time. So what I would like to invite everybody to is I have a webinar tomorrow afternoon if you have some time, and let me just bring over my website here if I can.
Yeah, that's great. Let's let everybody know where they can get more information.
Yeah, because we really want to wrap it up here and answer a few more of your questions. So the website is rockwelltrading.com, and I've written a book a few years ago, the Complete Guide to Day Trading, and it's 296 pages, and you can buy it on Amazon. Or if you just want to have a PDF of the book, you punch in your first name and your email there, and you can download the PDF right there. So I think it's a good beginner's book. It helps teaches you the basics about day trading, and we talked about my story. We have a blog here, and also something that you might be interested in is we have a live trading room, and every day we're posting a quick video here where we show you a summary of the trades that we took in this trading room. So you see, if you click on it, this little video starts, and we usually trade for 2 hours in the morning, and so there's a brief summary of what we did and what we traded. But what I wanted to tell everybody is it's a little bit hidden. But if you scroll to the very bottom of the story, and you see I have a long story, right? And I even had an epiphany at some time. So, but there's a long story, and the reason why I'm hiding this webinar at the end of the story is because I want you to read the story. I think there's a lot to learn from it that you can learn about my mistakes. But you see at the very end, it says, "Here's what I have for you. Click here to download the free electronic version of the book, The Complete Guide to Day Trading." And then there's another one where it said, "Click here to join me for a free webinar." And if you click on this is a webinar that we are having tomorrow afternoon. There it is, Friday at 3 p.m. Central Time. And if you click on this little thingy, it actually tells you, or it should tell you, what it is in your time zone. Do you like this, Rob?
Wow.
How do you like this little thing?
Wow.
I'm really proud that we have this. So you just
I like that all of America is a Democrat in that. I'm just kidding. It's all blue. It's all blue. What happened? Where'd all the gun owners go?
It tells you when you are in Germany,
Islamabad,
for example. Yeah. Sometimes I wish that I could find Germany in there.
Well,
I think we're only wiped out on the map. We were just in Eastern Europe.
Doesn't even have Frankfurt. Doesn't even have Frankfurt. So I encourage everyone, check out rockwelltrading.com. From the home page, you can scroll down to the end. You can get the free ebook. You can register for the webinar. And you post a summary of the trades for the day right on the website for everyone to see. I think that's fantastic. Yep. I think that's just absolutely brilliant. Marcus, any final words of wisdom that you'd want to share with individuals, and then I'll let them know how they can get in touch with me as well.
Okay. Well, I can just encourage you, visit these kind of webinars where you get some education, see what other traders are doing, because both Rob and I spend a lot of time in our lives making a ton of stupid mistakes and losing a lot of money, and we have found a way that works for us. Now, we are not running around trying to beat you with a stick and say, if you don't trade the way how we trade, you will you will grow old alone and be fat and bald and lose all your hair. That's not our point. We just want to share what works for us and hope that you can use some of the things that we are doing in your own trading and develop your own trading style, your own trading method. Because ultimately, Rob, did anybody teach you the Boscillator, or is this something that over the years you came up with?
I found it on a set of ancient scrolls on the shores of the Dead Sea in Israel, and no, yeah, I built it myself, and some people are builders, some people are excellent implementers of trading systems, some people are good teachers of trading systems. You know, everybody's got their talent, and I'm a pretty good builder of trading systems, and yeah, I taught it myself. I taught it to myself, I built it myself, and use it myself.
Yeah. The same here. I mean, if you look at my charts, you won't find these kind of setup anywhere else. Well, maybe if somebody is following me, but I mean, I haven't seen any other trader who had exactly these settings that I have. But I've used ideas from other great traders and say, yeah, you know what, this kind of makes sense. I mean, I was always fascinated with Bollinger Bands by John Bollinger, but I never knew how to use them correctly. So this is why I tweaked the settings a little bit, and I found a way how to incorporate it in my trading. Was fascinated by other indicators, and again, these range bars, I haven't invented range bars. I'm just using the range bars in a unique way that helps me to get an edge in the market, that helps me to spot trading opportunities and to quickly say whether I want to get into a trade, whether I want to get out of a trade, or stay out of the market. And so that's what I just want to say. Long story short, try to find something that works for you. Try to incorporate some of the ideas. And again, if there's more stuff that you want to learn from us, visit our websites. And this is where I'm handing it over to you, Rob, where you show people how they can get in contact with you and learn more about the Boscillator and the other tools that you have.
All right. Well, I really appreciate it. It's been fascinating. I've learned a lot, and I'm sure everyone else here feels the same. I had a lot of people say thank you, a lot of interest in following up and getting some of those materials. If you want more information about what I do in the Boscillator, you can go to boscillator.com. If you go to boscillator.com/course, you can see the free radar screen and get a readout for your charts. In 2 minutes, if you click on the Learn More button here, I'll do a quick 10-minute live broadcast. I'll answer your questions. I'll take your questions live on the screen, chat with you, and answer some additional questions about it. Other than that, I just want to thank everyone for spending time, for being here together with us today. I've had a I've just benefited so much from the time that I spent listening to Markus, and I appreciate you, Markus. Thanks for inviting me to do this webinar together with you. Thank you, everyone, for being here. If you have questions, go to Markus's webinar tomorrow, December 16th, and if you have questions now about the Boscillator, just go to boscillator.com and click on the Learn More link, and I'll be here answering your questions, talking to you a bit for a few minutes, and we'll see you later, everyone. Thanks, Markus.
All right. Well, thank you so much for being here, and thank you guys for hanging out with us longer than expected. I just hope that you got great value out of this, and that you're walking away from this presentation, from this webinar, with something that you can use in your trading right away. And
That's
yeah,
great.
Sorry to disappoint you. We don't have a pitch for anything at the end.
So, there's no pitch. All right. And I've saved this recording, and we'll send a recording out to anybody who'd like it. I'll send that recording out within the next 24 hours. Thanks, everyone. Have a good one.